finally got a temporary reprieve from full-scale selling today, thanks to some weaker housing data and some softer oil prices. But for the most part, those gains didn't last because the data comes at lower profits for the companies. That makes for a truly horrific market, though. One that tempts you to come in back every single day. We get oversold, and then burns you a day or two later as the bear quickly reemerges from hibernation. Right now, this market's got an ocean of bad charts. There's very little to like. But we also got some very positive rare islands, and they're all strange, frankly. And that's why tonight we're going off the charts with the help of Carolyn Boroden. She's a brilliant technician who's teaching at im.academy FX, the Stocks and Futures Academy. Normally, I'd also highlight her for an incredibly informative Twitter account, Queen of Fibs. But somehow they suspended her for impersonating herself. Very Kafkaesque. But I hear she's back now. When we asked Boroden if there were any bullish charts, any ones at all, she hesitated. And she says she sees some potential winners. In her view, even the S&P 500 might put in a low later this week, but she did not jump to the conclusion that there's a buy situation. So let me give you some specific examples, and you'll know why I really mean it when I say she doesn't really have a lot of ideas that you want to buy. Because the first one we're going to start with is Twitter. Yeah, because Boroden's broad-minded enough to consider, well, you know what, wait a second, that the chart, even when the company's giving her a headache, could work. Check out the daily chart. Twitter's made a pattern of higher highs and higher lows, which is a textbook sign of strength. At the same time, all the important moving averages that Boroden watches are on the side of the bulls. Twitter's trading above both the 200-day and the 50-day moving simple averages. That's important. She also likes to watch the 5-day exponential moving average and the 13-day exponential moving average when the 5-day crosses above the 13. That's her favorite buy signal, and we've got them all right here. This has every single box checked. More importantly, Twitter recently has held above its key floor report. Based on her Fibonacci methodology, Boroden could easily see the stock running to $53.43 or even $54.87. Sounds like where must they buy it, right? Now, she could even make a case going to 60. Yeah, I'm not buying that one. My caveat with Twitter is that this is all about Elon Musk being dragged kicking and screaming into buying Twitter for $54.20 per share, up $4 from where it is currently trading. I think your upside is capped at that level, and something goes wrong, wow, the stock will plummet through Boroden's support levels in the mid to high 40s, at which point she says you need to go bearish because the bull thesis is toast. I think it's really the chart of a hilarious egomaniac with a plaything and a box of crayons. What was it, Serena? What was that one, Sepia? Remember that day, like those weird ones you didn't understand? Next up, take a look at the daily chart of Valero. Yeah, the big oil refiner. This one's a cleaner story, because we have a shortage of refining capacity in this country. Boroden likes that Valero's trading above its 200-day moving average, plus the 5-day exponential moving average is above the 13-day, meaning the stock, it's a buy. After breaking out above a prior swing higher last month, Valero has now pulled back to a level that's right above a cluster of support. So right here. Remember, Boroden likes to measure the size of past swings in the stock. Then she runs them through the prism of Fibonacci ratios to find key levels where that stock is likely to find support or resistance. With Valero, there's a cluster of floors of support running from 106 to 108, down a few bucks from where it's currently trading. Boroden believes that there's only about 10 points of potential downside if the floor breaks down, meaning it could go to the mid-90s. On the other hand, as long as the floor holds, she can see the stock rallying to 123 with the next stop at 127 and a longer-term price target at nearly 133. Hey, you know what? That is what I call a solid risk-reward for what I think is America's best refiner. Next, take a gander at the chart of Warren Buffett favorite, Occidental Petroleum. Oxy, for short, has become a lot more attractive now that OPEC's actively moving to prop up oil prices. Boroden points out that Occidental recently made a low at a key symmetry support level. The concept of symmetry is a little weird, and a given stock moves in a single direction are often very similar in scale. It's in the same world, this kind of analysis would never work. There's no logical reason why stocks should trade like this, but we don't live in the same world, do we? In reality, you can see these symmetry moves popping up in all the charts all the time. Like a lot of things involving technical analysis, you don't need to know why it works. You only need to know that it tends to be surprisingly reliable. With Occidental, the stock had a $19.74 decline back in May and in June, okay? Then it had another decline from late August to September that took it down $19.70. Boroden suspects that move gave us a sustainable bottom. Doesn't hurt that Occidental's lows overlap with two other Fibonacci price retracements that give it a nice floor in the high 50s. The stock then ran to the low 70s, but it's pulled back. It's now down to 64 today. Boroden hopes it pulls back a bit more. She'd be a buyer between $60.56 and $63. One caveat, though. She also wants to wait for the 5-day exponential average to go back above the 13-day. Remember that she's like that each time, meaning her buy trigger has yet to be fulfilled. However, she does expect Occidental to bounce. As long as last month's lows hold, she could see Oxy running all the way to $82 or even $89. On the other hand, if that late September low at 57 is violated, she says you need to throw in the towel. Now, finally, let's talk about something that's really kind of intriguing to me. The broader market, the S&P 500. Right now, Boroden's watching for some crucial Fibonacci timing levels in the S&P. Based on the duration of past swings, she says we've got a group of time cycles coming due from now through Thursday. That means we are due for a real bounce. Although I caution you not to get too excited in this environment, given how uneven today's advances and decliners were. All right, here's the bottom line. The charts, as interpreted by Carolyn Boroden, suggest that Twitter, Valero, and Occidental Pete could have some upside here. I'm more cautious on Twitter because it's an arbitrage play. But the other two have my attention, and wouldn't it be something if the S&P actually caught a bottom here? Let's go to Cush in my home state of New Jersey. Cush.
Yes, my son has a question for you guys.
Yeah, absolutely. Maybe kids got horses. Let's take a listen. What's up?
So my question was on the stock Exxon. Like, OPEC has cut down like 2 million barrels per day of production, and gas prices are steadily rising, and so is the barrel of crude oil going. So what are your thoughts on the stock Exxon? Go Patriots.
I like the stock Exxon. The kid does have horse sense. See, I told you. Kush is smart. And let me tell you why I like Exxon. It's still well behind the other oils, and yet it's gotten much more aggressive management. I think you're fine in Exxon. I buy some here and then buy some more if it goes lower. How about Glenn in Connecticut, please? Glenn.
Hey, Jim. Yeah, hey, big booyah from Connecticut. And I love your
thank you, partner. What's going on?
My question is about Twilio. I'm averaging them in the mid-70s. Is it a buy, sell, or hold?
See, now Twilio's has got to be between because I'm not recommending any stocks that are losing money, and Twilio happens to be losing money. That said, it's got a chart that's bottoming, and it's got a company that's run by a really terrific guy by the name of Jeff Lawson. I would no longer sell the stock at 67, nor would I buy it. I think it's a hold, and that's all I can say about it. Charts interpreted by Carolyn Boroden suggest that Twitter, Valero, and Occidental Pete could have some nice upside here. I'm more cautious on Twitter, but the others, they've sure got my attention. Much more made money on, including CNBC's Julia Borson. She's out with a new book, When Women Lead. And I'm finding out more about what she learned and why it's so important more than ever. Then, something rational is going on in this market, and I'll reveal why your cereal bowl could be behind some major gains. And all your calls rapid fire tonight's edition of the Lightning Round. So stay with Cramer.